American real estate, good old-fashioned American real estate, has been undervalued since the beginning of time. And since the pandemic, it has increased a lot in value, and anybody who owns real estate has been able to really benefit from that. And I think that American real estate is finally gaining the value that it should have been gaining for the past however many years.
Welcome back to the Massive Passive Cashflow Podcast. I'm Gary Wilson, your host. I'm so glad to have you back listening to the show or watching if that's the case. We got a great guest today, Terry Roberts. And Terry and I met through one of the team members on the Global Investor Agent team. It was a great connection. And I think you're going to really enjoy this podcast. And this is one you're going to want to take some notes on. Unless you're driving, don't worry. We will provide show notes on our podcast page on the website. Just go to globalinvestoragent.com. And you'll be able to click through there and get the landing page of what we call the notes, so show notes. In any case, Barry, first off, I just want to say thanks for being here and welcome aboard, man. We're so glad to have you.
Thanks, Gary. Thanks for having me, and thanks for taking the time to have a conversation. I appreciate the opportunity.
You got it. Well, hey, I've interviewed a few lenders over the years, but when I met you, what I liked is the fact that you have a variety of courses you can tap into, and you can do business in a lot of places. You're not just restricted to one or two states or anything like that. But before we get into the meat and potatoes, I always like to have whoever I'm interviewing sort of give to your background, because most of us were not born saying we're going to be a real estate mortgage lender or a real estate agent or anything like that at all. We wanted to be cowboys and astronauts and that kind of thing. So. But what was what got you into lending? What was the inspiration for that?
That's a great question, and it seems like I come up with a different answer every time, but it ends up boiling down to the same overall reasoning. And I think a lot of it was just the path from me literally being homeless and a high school dropout and a teenage father that led me to join the Marine Corps. And I just knew that I had to provide for my family one way or another. And at that point in my life, being 17 years old, I didn't know if I had any other options. And one way to check all of those boxes and serve my country was to join the Marine Corps. And that was the foundation of, as well as the men and women that I served with in my close community. That is the foundation of why I am the person that I am and who I am today. I served in the Marine Corps for 9 years active duty. And after I got out of the military, I joined a company and was there for 6 years and essentially got my MBA without having to go to college to get the MBA. At that company, they were heavily involved in a program called the National Malcolm Baldrige Quality Award. And there are very few companies in the nation, in the world, that receive that award. And if you receive that award, the President of the United States will hand that award to you in DC. And this particular company that I was with, they just received it, I believe, for the fourth time. And I don't believe that any other company received it. My point there is I had the military experience and the leadership and the camaraderie, and then went into business and got my MBA in business by DIY, essentially through learning a lot about strategic planning and marketing and human resources and process management and KPIs. And I can't remember if I said strategic planning, but that as well. Those tools that I learned going through that had landed me the opportunity to join a local mortgage company that specialized in VA loans. And I had then moved over to that company to serve in a role as the VP of Innovation, Executive VP of Innovation, where my responsibility was to help lead the efforts of migrating the organization's, the entire mortgage company's CRM and LOS platform from their current in-house built systems to Microsoft Dynamics and Encompass. Anybody in the lending world would be very familiar with those terms without actually hindering business. And so we did that successfully. I learned how the process worked on the lending side, managing a team of loan officers and processors and underwriters and closers and setup specialists through this transition. and I became a loan officer. I fell in love with the process. And because it was VA centric, I wanted to help as many veterans as I could. I felt like I had a head start on any other person who wanted to become a loan officer because I had been so intimate with the process from the very beginning all the way to the end. I knew what the loan process looked like without ever having done a loan myself. And so I got my NMLS ID number 397987 in 2009. And I've been doing loans, mortgage loans since then. And not long ago, I would say a couple of years ago, I left the retail space, no longer with a mortgage company or a bank. I am a broker. And for those of you who are real estate agents or clients, a lot of people, even loan officers that I served with at a mortgage company, didn't truly notice or realize the difference between what a broker was and a loan officer, or a loan officer and a retail loan officer or a broker. So think of it this way: as a broker, I don't work for a bank. I don't work for a mortgage company. I work for you and your client. If you're the one buying the house or refinancing the house, you are my boss. I have 160, 170 different lenders that I can shop your loan for you. So I have a lot of clients. I will pre-approve them, and they will say, okay, well, just to let you know, I'm shopping around and really looking for the best rate. And that's typically when I say, like, I see that you're an RN, you're an ER RN, and if I wanted to, say I cut myself, and how would you feel if I decided, I'm just going to get some peroxide and a needle and thread and just stitch it up myself? You'd probably almost get sick because I don't know what I'm doing. I should probably come to you for that. It's the same scenario with a mortgage broker. Rather than you as the client shopping for your loan, because you're not in the industry, you're not a professional, you don't really know if you're really getting the best deal. As a broker, because we have 160, 170 lenders, number one, we've got a much broader space of lenders to look for and know who the good ones are as far as what your actual requirements are. Is it fast closing? Is it really low rates? Do you care about service? Things like that. And once I, as a broker, understand what those are, I'm going to have that list of 170 lenders narrowed down to probably 3 or 4 pretty quick, and I can present you the options. As a loan officer that works for a bank or a credit union or a mortgage company, I can only offer you what that bank or credit union or mortgage company allows me to offer you. So that's the main difference between a broker and a loan officer that works for a bank or credit union or a mortgage company. And that's pretty much how I got to where I am today.
Wow. So you're, let's talk about your clients. Like in my business, we're known for our investor platform. We know how to work with investors. In fact, we are investors. So, that's sort of our superpower, even though the majority of our business is traditional clients. We help everybody buy and sell homes just like any other team of brokers. But the fact that we have a unique platform just for investors allows us to niche market. So we capture that audience. And a lot of times they're using the same types of loans. I mean, clearly there's a lot, more variety in loan investing. But when you were getting started, kind of tell us about that. Like who were your clients? Were they mostly traditional clients looking to buy or sell their own home, or in any case, buy actually? Any investors, peppered throughout that mixture there, or what was it like in the beginning? And did you start out as a broker, or did you actually start out working for someone else first? Like in the case of a loan officer,
Sure. I started out as a loan officer. I didn't work for a loan officer. I wasn't a loan officer assistant or a transaction coordinator. And I would say 99% of the loans that I was doing was VA loans, which in the industry, most would agree that VA loans are probably among the more complicated options, especially if you haven't done a lot of them. I did literally thousands of them. So that's where I cut my teeth, was on one of the hardest lending products out there, which was a VA loan, purchase, refinance, cash out refinance, all that good stuff. A lot of people don't realize you could actually use a VA loan, assuming that you're eligible, you're a veteran, and we can get your certificate of eligibility. You can use the VA loan to buy an investment property. So I learned that through the process of doing a ton of VA loans, helping a ton of veterans and active duty service members. But I didn't do hardly any investment properties that the way a lot of us interpret what investment property financing would be, until I got over to the broker side, just because that's the other benefit to a broker is if I work for a credit union, I'm not only am I limited to the interest rates that credit union will allow me to offer, but I'm limited to the loan products that credit union will allow me to offer. And as a broker, you think about when you pile up all of the 160, 170 plus lenders that I have, they're not, some specialize in investor clients. Some specialize in land, some specialize in development, some specialize in VA loans, some specialize in conventional, some specialize in asset depletion. Different types of lending options where we don't even need a pay stub or a tax return or a W-2 or a 1099. And the more I learned about that, the more I learned about how many realtors really don't know that those actual type of finance options exist. And they're so easy to go through compared to what I think is just one of the things. If you're not familiar with it, it's intimidating just because you're not familiar with it, or you don't even know that it exists. And then as soon as you find out, you're like, why didn't I find out about this? I had a conversation with a realtor friend of mine that I've known for 16 years. He's been a real estate agent for 30 years. And I asked him about this one particular investment loan option, which is an extremely common option, and he had never heard of it.
Hey there, did you know you can join a free real estate mastermind session every Monday night? It's called Monday Night Live, and it kicks off at 7 p.m. Eastern. I'm Gary Wilson, and every week I host this live class, joined by investor agents from across the country and around the world. And here's the best part. No selling, no recruiting, just pure, actionable real estate education. Every Monday, we cover everything from the basics to advanced strategies. We even bring in expert guests once or twice a month. Topics like how to buy property using crypto, how AI is reshaping the real estate landscape, what the metaverse and blockchain mean for real estate deals today. Whether you're a new investor or a seasoned pro, you'll walk away with real value, and you'll have the chance to ask questions live, connect with others, and expand your network. Sound good? Then head over to realestatewithgarywilson.com. Click the Resources tab, select Monday Night Live, and you'll find recent replays plus a full schedule. You can register for any upcoming session, even weeks in advance. And if you're watching this on social media, just check the video description for the direct registration link. I'll see you Monday night. Bring your questions, your notepad, and your drive to grow. I look forward to connecting with you.
I want to go back to the VA loans for a minute. And the reason is I've been in my family is a military family, and I grew up, moving from base to base, country to country, state to state, town to town. And then in business, when I got my license, I didn't get my license to be a regular agent. I got it to be more investing, and I started attracting investors, of course. But one of the things I did is, this was back when Stars and Stripes magazine still actually had a magazine. Now it's all online. I don't even know if they still do it. But I noticed realtors advertising themselves in there by just taking a picture of their business card, putting it in that thing. And they're all the same. So I thought, well, you know what? I'm just going to let them know that I know how to invest. So I put in there specializing with military investors. Man, you'd have thought I'd invented pizza. But I'm getting calls from people not only across the country, but in different countries, like guys stationed in Germany saying, hey, man, I want to invest in Tidewater, Virginia, which is, we call it the 757. That's where I was. And I started getting deals that way. And a lot of other agents will call me and say, hey, my clients at the Brandberg Air Force Base, or they're in California, they're in Colorado, they're in whatever, Nevada. And can you help them? And I would say, sure. And that agent will get a referral out of it. But one of the things, here's what I'm getting at. One of the things I really liked about them, well, not the fact that, aside from the fact that they were extremely good characters and disciplined, they were really good with their money. What they would do is they'd follow the rules, get a VA mortgage and buy either a single, duplex, triplex, or fourplex, live in one of the units, right? And out the other ones, which is perfectly legal. And then when they got a change of duty station, if they got transferred across the country, they would keep the property, but refinance it into a conventional mortgage, which freed up their VA eligibility. So have you seen that before too? And how does eligibility? It's not numbers of properties, right? It's dollar amount. Is that right?
Exactly right. So eligibility starts with they refer to it as entitlement. Your military service members or veterans basic entitlement. And then second tier entitlement. I've had clients that have had 3 properties at the same time three completely different properties and with a VA loan on all three of those simultaneously. And it really boils down to this calculation that the VA set forth that doesn't make any sense, but it works. And a VA specialist lender will most of the time be able to come up with what that remaining or second tier entitlement availability amount would be off the top of their head, usually in about 60 seconds. And because of that, that's actually a way. So in the example where you mentioned, it's if you have a client that bought a duplex with a VA loan, they occupied one side, which is the only requirement for the VA, and immediately rented out the other side, or if it was already rented. Something else that recently changed is you could actually use existing rental income for that other side to qualify as qualified income to buy that property. So I've had clients, they bought the duplex, they occupied one side, they're renting out the other side. Then they went and bought another duplex without refinancing the current duplex because they had a 2.25% on it from 2020. They still had enough entitlement to go and buy another duplex and do it all over again. Now they've got 4 investment units. They're occupying one of them still, technically, and they've made 0 down payment on those.
And the income from the rentals, whoever's doing the VA underwriting, they're adding that to the entitlement. Is that what they're doing?
They use that. They typically will use up to 75% of the rental income as qualified income for the loan.
Okay.
Mm-hmm.
Nice. That's and for everybody listening, if you're an agent and you've got clients who are active duty, I think even reserve qualified too, or retired, it's a huge opportunity for you to conduct business with them, especially if they want to invest. And that's not like, they might not end up being like, Donald Trump or anything with thousands of units, but let's say, if they buy 3 or 4 units with you, that's a good day. I mean, how many of your regular clients are going to bring you 3 and 4 deals on a regular basis like that? Not only that, I've noticed in the military, I grew up around my entire life, of course, going to be very tribal. They kind of look out for each other, and they will refer you to other people, especially if they know somebody getting transferred to a duty station that's where you're located. So, okay, well, hopefully that'll light some fires under some of the agents, your ends out there. But what kind of programs are out there now? Like, can you access, Fannie Mae, FHA, but also like non-conforming loans? I mean, there's a whole gamut of things that are out there. But what's the scope of your reach as far as being able to serve the borrower's needs?
Sure. I've had the opportunity to provide financing options for development. So a builder with 20 lots, and it's actually the funds provided for them to put in the infrastructure and build the homes ground up, to asset depletion loans where no income is actually, if you're an investor client or you're a realtor and you have a client who's an investor who doesn't have income other than potentially say it's their retirement pension or Social Security income, and that income in itself is not enough for them to qualify, they can use their assets as income. So an example would be if they've got $2 million in their retirement portfolio, and they would not receive a penalty by withdrawing that money. So typically they're over the age of 62. What we can do is take that balance, divide it by the number 60, which implies that as long as whatever that number is, let's say it's 15,000, that 15,000 then becomes the magic number for the amount of qualified income that we can use to purchase that property.
Yeah.
Another example. Awesome. So that's a good example for clients who don't have enough traditional qualified income. Mm-hmm. Another particular investment financing option is for a lot of the realtors that I work with who want to buy an investment property themselves, but they can't qualify the traditional Fannie Mae, Freddie Mac because their qualified income isn't high enough because they're 1099 and they have a lot of expenses. And what a traditional lender is going to look at for a qualified mortgage, i.e. conventional loan through Fannie or Freddie, is they're going to say, well, based on your tax returns, whether it's a Schedule C, Schedule E, you've got rental properties, or if you're big timing and you've got an S corporation, they're going to look at all that. They're really looking at your net income. And for those of you who have gone through this, you know exactly what I'm talking about. And it's nothing but a disappointment because you're making good money and you're just trying to capitalize on growing your business. And that's happening through the expenses that you incur as a result of the growth. However, that net income amounts to not enough to qualify through a traditional loan. So the financing option that I have doesn't look at any of that. It doesn't look at your tax returns, whether it's a Schedule C, S, S Corp, Schedule E, none of that matters. We don't even ask for tax returns or 1099s or financials, P&L statements. The only thing that we would need is a driver's license, a bank statement to verify you've got money for a down payment on this deal. And then we do a rental market appraisal to see, for that market, that particular subject property is expected to bring in, let's say, $3,900 a month in rental income. And then what we look at is based on the purchase price and the interest rate and the down payment, what is your monthly payment going to be? And as long as that monthly payment does not exceed that market value, you got the loan. You're done. That's it.
That's amazing. Hey, now the way you, because you're a mortgage broker, can you lend in all 50 states or even just the continental, what we call the lower 48, or and even if you're not able to personally, do you have colleagues like I'm not sure how what the terminology is, but like affiliate lenders that you partner with on things like that? How does that work?
So I as a broker, I am 1099. I'm an independent loan officer, and I work for a brokerage called eMortgage Capital, which is based out of California. And eMortgage Capital is who technically has the relationships with the 160, 170 plus lenders that we work with. And I'm the one that just facilitates the process all the way through. So it's not like if you're a client and you come to me, I take your application. It's not like I just take your application, you never hear from me again. I am your dedicated loan officer before, during, and after the entire process and all the way through. So if you decide to buy again or you refinance the existing property that you have, we might not even work with the same lender the next time, but I'm still your same loan officer. I can help you with your real estate financing to any of the lenders that we are partners with.
Okay. That sounds pretty good. Now, what about foreigners? Like we often on our team, it's called the Global Investor Asian Team because we have clients from around the world, and not every day, but at any given time, we might have people in a dozen different countries looking to buy here. What's ironic is, I don't care where people are in the world, even Canadians. It's just they will choose to invest here in the United States because I think they feel like it's a safer, less risky way to do business. They don't have to worry about the government changing the laws overnight and taking over the properties, which has happened around the world.
Yeah.
And quite frankly, look, everybody's coming here. I don't see anybody jumping in rafts and going down to Cuba. I'm sorry if you're Cuban. I'm not trying to be offensive. I'm just being practical about it. Values keep going up. But so are there requirements? Like, can they invest here in the States, buy properties if they meet certain requirements?
Yes, that is technically possible. It just depends on the scenario, the lender, the type of financing. But yes, I have done real estate financing for non-U.S. citizens. Yes.
Okay. Now, you mentioned doing like some development work. So what type, if someone wants to, I guess I should give an example. Like in California, we have a potential transaction in to be careful, but I'll just tell you, it's in Sacramento. That's an ideal piece of property. I can't believe nobody's snatched it up and built on it yet. But it could be a good big mixed use place with retail, high density housing, office space, things like that, and some recreation area. It's pretty sizable. But I think because of where it is, it doesn't just have to be residential. It doesn't just have to be retail. Is that something you can do too, or do you have contacts that you can partnership on, or how does that work?
Yeah. So my tagline is I'm able to offer just about any type of mortgage product possible for just about every scenario imaginable and with just about unbeatable pricing. And I say just about just because I can't guarantee any of this. You put real estate and you mix real estate and human beings, like you just never know what you're going to get. But I am confident, but being in the industry as long as I have been, I'm typically able to anticipate what those obstacles are going to be early on in the process. And then that's when, once I anticipate what those are, I'm going to reassess and just be right up front, because I've been there and I've done that. And if I'm not the right one to do the job, I'm going to tell you why. And I'm going to make a recommendation on who probably can. So in the example of development properties, the more I learn about the area, what the attributes are, the down payment, what the plans are, and everything like that, if it makes sense, yes, I've got lenders that can help out with that. If I think it's in an area like where I'm from and I know how local banks work, I would probably in that scenario say, hey, like, I personally work with the local bank on a deal very similar to this. And based on my experience with them, they do it more than I do. So you're going to get better service. And because they're local, their terms are going to be better in this type of a scenario compared to what my national hard money lender would do. If they're in Tennessee, they don't know anything about the property outside of San Francisco. And because of that, it appears to be more risk to them. Because it's more risk to them, their terms might not be as advantageous. And those are reasons that I would explain to a client on why, yes, I think I can do it. But I would highly recommend exhausting all efforts with a local bank that specializes in something like this first. And then if you can't get the answers to the questions the way that you want them, know that I'll still be here and happy to help. But at the end of the day, I like to sleep. I like to sleep well. I want good quality sleep the older I get. And I don't want to steer anybody down the wrong path and they suffer as a result of it.
Yeah, I agree 100%. I'll tell you what, the one thing you learn in this business is usually people who are newer are they're basically chasing transactions. They're transaction oriented. But the veterans all know it's the relationship. The relationship is where the gold is. If you build and maintain a good, healthy business relationship with people, not only will they give you all their business, but they'll send people to you. And all it comes down to is the golden rule: just do unto others as you would have them do unto you. Do the right thing. And it's a promise it'll pay dividends. Down the road. It's hard sometimes because I know when you're in business for yourself and volume's low, you've also more to get deals done. And but you just have to always do the right thing, because if you do, that's what people will remember more than anything else. So I know I'm getting kind of preachy here, but back to the topic. So we just saw another. I'm going to time date stamp the podcast. We just saw another 0.25% Fed rate cut yesterday, and that I'll tell everybody that was the 29th of October 2025. And I do believe it's just my opinion. I think we're going to see another one, because I think, and I'm not trying to be, I think our Federal Reserve has done a wonderful, excellent job for quite a long time. This year was unique that the current Fed chairman was deciding to wait and see, which you never do in real estate. You just can't do that, because the trend is already developing and it takes a long time to turn. So I think they acted too slowly, quite frankly, and I think they need another rate chop. But I know people always hate this question, but what are you seeing for the future as far as rates, volume of activity, opportunities? I mean, there's so much out there that that's like the opportunity zone investing. Oh my God, it's the reason why no administration messes with it is because it works. The past administrators left it alone because people are making money with it, and it basically transcends all barriers other than financial. It doesn't matter your background, your education. If you can do something in an opportunity zone, people will get behind you to support you. You just got to have a good history. Sorry to ramble, but what are you thinking there? I know we've been in a slump volume wise, but the strong always survive. As far as rate cuts go, and then future as far as maybe some different ideas for loans coming out that maybe on the kind of in the development phase, anything like that you're aware of?
So I'm glad you brought that up. I mean, minutes before we jumped on this podcast, I just I posted another reminder to all my realtor friends who are making posts about the Fed rate cut, lowering mortgage rates. Please don't do that ever again. It's nothing but a disservice to everybody. A very small percentage of the time that might be right, but it's not, because there's a positive correlation between the Fed rate and the mortgage rates. However, if you want to be have good information and knowledgeable about the market and have an idea of which direction that mortgage rates are trending, just Google the 10-year US Treasury, and that will give you a really good idea. I would not necessarily look at it day by day or even really the past month. I look at it as trends, and that's the basis of my answer that I'm about to give, because it's the same way that I give the answer to anybody who asks that question. Will mortgage rates gone down? They have this year. And if you look at the 10-year US Treasury, you're going to see that has gone down as well. It's not an exact one-to-one correlation, but it is a significant correlation between the 10-year US Treasury, how that performs with respect to what mortgage rates do. So I would defer to that 100 times out of 100 over what the Fed does with the rates. In fact, if you go back and look at the last, I would say at least 5 times that the Fed cut the rate, mortgage rates actually went up. So if you don't believe me on the 10-year Treasury, at least go back and look at what the mortgage rates did each time the Fed cut the rate. But the market, I mean, it's already responding, and it always will be, and it's going to be behaving ahead of what the Fed is actually doing. So yeah. I do believe that rates will continue to trend downward. I do not believe that it's going to be a significant drop unless an absolute catastrophe happens again. And I wouldn't be surprised if it does. Just looking over the last 40, 60, 70 years. If or when something like that happens, I can see that there would be another rate drop. How low? I mean, we just don't know. I don't think that we ever will until we get to that point. The other thing is, I mean, if you just look at property values, especially in America, my opinion is American real estate, good old-fashioned American real estate, has been undervalued since the beginning of time. And since the pandemic, it has increased a lot in value. And anybody who owns real estate has been able to really benefit from that. And I think that American real estate is finally gaining the value that it should have been gaining for the past however many years. And it's finally become, if you compare American real estate to European real estate, it's still undervalued, And the other thing is, the best time to buy real estate is yesterday. The next best time is now. The interest rates are always going to fluctuate. The prices will as well, but the prices over time are going to go up just because the value, they're not making any more of it. The interest rates are always going to be fluctuating up and down. So if you think about it through that grid, do your best not to try and time the market, because even if the rates are 4.5% in 18 months from now, the value of the property is likely going to be higher enough then compared to now to where your monthly payment could be the same. The only difference is you just lost out of 18 months of building equity in that property if you don't buy it now. Yeah,
I agree. I know we're going to run short on time here, but I always tell people when they ask me, should I sell? Should I do this, do that, trade? I'm like, look, I've been an investor it'll be 40 years this January. In about 2 months, it'll be 40 years. And one thing for sure is, unless you're dying or whatever, something really, really catastrophic, hang on to your real estate. Do not sell it. Just hang on to it. It can be a bank. When you pay it off, you can get a line of credit against it and use it up to buy another property, pay it down, use it up again. Hang on to your real estate, folks. Okay. I'm telling you, unless there's some dire consequences. One last question. I know we're getting over the magic half hour here, but refis. People are asking me, hey, should I refinance the mortgage? I'm like, look, I just bought a house, so I'm not refinancing. My rule of thumb is if I can get, well, depending on the size of the mortgage, if I can get 2% less to what I'm paying now, yes, I will refinance. That's my rule. But isn't it really case by case? I mean, somebody can have $1 million mortgage, somebody else could have $100,000 mortgage. So 1% can make a big difference depending on the size of the mortgage. That's why you can't really just say 1% or 2%. That's my opinion. But what are your thoughts there?
Sure. Yeah. The loan officers that I have within my branch, they are primarily helping clients through refinances, whether it's a cash out or a non-cash out. And there's so many different ways of doing it. And every client is completely different. Some just want to lower the rate. And exactly as you said, if they have an $800,000 balance, dropping the rate by 1 point, I mean, that could save them $400 or $500 a month. Plus the fact that they could skip 2 months of payments after the refinance. They could get an escrow refund if they're looking for relief, immediate and long term. That might make sense. We've got other clients like you guys. Look at just Google the average national credit card debt, per person. And I don't remember what that number is, but I've had clients that they had a 3% on their current mortgage, and we refinanced them to a 5.25, and they still saved $1,700 a month because they had so much credit card debt that was at 26% interest. So I call that the effective rate. Rather than sticking with your mortgage rate of 3% so that you can pay 26% on $90,000 in credit card debt, you're actually shooting yourself in the foot. Not to mention the fact that immediate savings, you get that you might be able to get more cash out than what you need just to pay off the credit cards to do some home renovations because you don't want to deal with moving. I don't know about you, but I never want to move again. I don't want to pack and move. I just don't. And I won't. I'm never going to do it again.
Yeah, I hear you.
Plus, again, they can skip up to 2 months and they can get that escrow refund, especially this time of year, right before Christmas. That's typically when we'll see refinances start to go up a little bit. Just a tip here on how to lower your monthly payment without refinancing, to get a little bit of relief, and it doesn't cost you a penny to do it. And it typically takes about 5 days. All you have to do is call your trusted lender or search around for a reputable homeowners insurance agent and make them compete on their premiums for your new homeowners insurance policy. And chances are that will go down. There's so many, if you love your current insurance company, there are still ways to lower your premium. It'll likely result in higher deductible or less coverages. As long as you're still meeting the coverages, the lender doesn't really care what you change that to, but make those homeowners insurance companies compete with one another. I had a client, it was a small policy. The house was only valued at $240,000. And we were able to lower her monthly payment by $85 just by changing insurance companies. So property taxes, there's nothing we can do about that unless you're a VA service connected disabled veteran and you've got a rating of 100%. There's a number of states that will completely exempt you from property taxes. Florida being one, Virginia, Arizona, New Jersey. There's a number of states that will allow that, which is a huge advantage for those who are eligible for the property tax exemptions.
Gotcha. Well, listen, this has been a great show. I know we're a little bit over time, but that's okay because you were doing a great job. And I didn't want to, I wanted to get that last question there. But I want to thank you again, Terry, for doing this, and for everybody listening, Terry. What's the best thing they can do, or the easiest way for them to get a hold of you if they want to interview and do some business with you?
Yeah, I would love the opportunity to speak with anybody. If I'm fortunately in a position now in life to where I appreciate the opportunity to help people, and I've got the capacity to do so now. So my personal cell phone is 573-239-9631. You can visit my webpage at terryroberts.com. And I am with eMortgage Capital. My NMLS ID number is 397987. And I believe eMortgage Capital's NMLS ID number is 1416824. just to make all the compliance regulators happy, and I get all of that information disclosed. Thanks for the opportunity, Gary.
You got it. And for everybody listening, again, this is it's Terry Roberts. Okay, Terry with 2 R's, Terry, and Roberts, just like it sounds, Roberts. Number is 573-239-9631. And you can also visit terryroberts.com, and even just go to emortgage.com. Is that right?
Just terryroberts.com, and that'll take you to my mortgage website. Yes, sir.
Okay. Well, thanks again, Terry, and thank you, listeners, for listening. If you can leave a review, we'd certainly appreciate that, because Terry and I don't get paid for this. This is a community service, and we love to do it because it's network building. And I think you should participate if you're a listener. So leave a review, right, and share your thoughts. In the meantime, take care of yourselves. God bless you and all your loved ones, and we will see you on the next Massive Passive Cashflow Podcast.
Thanks for listening to this episode of Massive Passive Cashflow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.